what works and what doesn't. At any given time, there are companies that are doing well, companies that are doing okay, companies that are doing poorly. Right now, we've also got a fourth category, companies that are currently stinking up the joint, but should thrive when things get back to normal. Holy grail, companies that are crushing it now and will keep crushing it after the smoke clears because they're riding new, powerful secular trends that we didn't even think about before the pandemic. Let's start with the best of the best. This quarantine has shown the world just how easy it is to use Zoom video. Even tech doofuses like me can make it work. The quality's fabulous and it'll run even better on your phone once we get to 5G. For people working from home right now, Zoom's a necessity. I bet it's here to stay. Turns out millions of people can do their jobs just fine from home. Plus, you can take back an hour or two that might have been stuck in traffic, cutting carbon emissions while we're at it. This outbreak has been like a gigantic society-wide proof of concept for working remotely. I think Zoom CEO Eric Yuan is a hero here. Cisco also has a terrific video conferencing platform, but remember, it's not a pure play. Next is Zscaler. Have you seen that stock? This has been amazing. This cloud-oriented cybersecurity play is ideal for people working from home. I like CrowdStrike, too. Oh, and of course, there's Teladoc, which we heard from on Monday, because telemedicine is taking the world by storm. Who wants to sit in a waiting room when there's an illness that we have no natural immunity for raging in this country? The work-from-home economy is so strong that I'm betting office building leases could actually be hurt by this. Maybe that's why you see some of these deals break down. All of these companies were doing really well before the coronavirus outbreak, and they're going to keep doing well after. There's a portfolio. Now, not diversified, though. One more thing here. You know who else is thriving? Nike. They reported some great Chinese numbers last night. I wouldn't chase it up here, but I think the stock is a buy on any weakness, and we're going to get weakness. Don't worry, this ain't over. Second category, well, you got the slow and steady win the race companies that are doing fine now. Keep doing fine because they make drugs or consumer staples. I saw Hershey go up, but the paradigm is Johnson & Johnson. AAA balance sheet, strong quarter, excellent pipeline, just a good, solid business that's basically recession-proof that has seen its stock get crushed. Third, who's struggling here but will thrive when things get better? You know, I'm going to start with the big one. I'm going to start with Apple. Yes, China's coming back online. Sooner or later, the same thing's going to happen in Europe and the United States. Some retail stores will be open in China. When it happens, I expect Apple to come back stronger than before. And that's why the Deutsche Bank upgrade resonated so much. Apple can be bought, especially as it teetered. The stock teetered into the close after an otherwise very constructive session. Who else fits in this category? Let me give you a wild one I haven't talked about lately. It's Facebook. They just cut numbers yesterday because their advertising business is getting hammered. It's not as strong as Apple, but it might be worth owning if the stock gets driven low enough. Turns out Facebook's a lot more cyclical than most people thought because at the end of the day, it's advertising and the ad industry is cyclical, but they have a lot of new businesses that turned out they're not monetizing yet, but they could end up monetizing. Finally, they're the real losers. The ones that might never recover, even with federal bailout money. It's the cruise stocks. They all roared today because apparently the Senate bill is something for them. I say, so what? The government can give the industry all the money it wants, but they can't make people take cruises. And we've learned that these ships can be terrifying incubators for the coronavirus. It's unfortunate, but true. The cruise lines can't recover until people stop being scared. That won't happen until we beat this thing. And then people put it out of their memory. I think these companies are both cyclical and secular losers. My wife and I were about to take a cruise before the outbreak because some levels of the ship seemed like the old Cunard lines used to ferry people across the Atlantic when ships were kings. Now, though, I see them as hospitality, maybe turned hospital ships, desperately searching for a port that might take them. That's the opposite of Zoom. If you still own any cruise stocks, you know what? I think you got to use the strength to get out of them, even if the government does the best to save them, which I know it's going to try. A recovery for these companies is going to be years out. Good for the customer when it comes to prices, but terrible when it comes to the stock. Sell, sell, sell. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.